Another wild Sunday night here. So the precious metals, they plunged overnight on the trade deal framework and the collapsing silver rates. You got copper, Bitcoin, US equities all jumping higher right at that open on the Sunday night futures open. So if you don't have a futures trading account, that's one of the benefits is you can look at making some of these portfolio moves on the Sunday night opens here. So you look at soybeans up 1.78% here, trading at 1060. That's up 18 cents. Soybeans have been in about a 1 year range from 985 to 1087, about $1 range here over that time period. And the news is that China will make substantial purchases of U.S. soybeans. That's according to Treasury Secretary Bissett. I'll be on AgriTalk later on today with Chip Flory here this afternoon. I'll be wearing my Make Soybeans Great Again hat here. And actually, you know, if you don't know me, I started trading commodities and soybeans back in 2001. And then I went to corn, orange juice, natural gas, U.S. equities, metals. And what I ultimately realized is that there's a bull market somewhere. You just need to go out and find it. So good morning. It's Monday, October 27th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So looking at some of the top headlines, the overnight price action in commodities, equities, precious metals here. So back to the precious metals, your critical levels of trend support, couple bullets here. One, the ETFs, they sold 317,000 troy ounces of gold. That was the most in 5 months on Friday. You also had gold have its first losing week in the last 10 weeks. So has the trend potentially broken? I think it's a little bit early to tell here. There's a lot of structural support on that gold market, a lot of ETF flows, a lot of portfolio demand, central bank demand, things like that. So you look at the gold market, 40.2120, that's your October 22nd lows. You go to Wednesday and Thursday, those overnight highs near 41.75, that was last week. That's your resistance zone. So basically we've gone up, we've made all-time highs. We come down, we crash down with that largest one-day sell-off in 12 years. We bounce off as support as traders front run that 4,000 mark, bounce up to 41.75, and now we're trapped in this range right now. You look at the silver market, your level of support there is going to be 46.82. That's the October 22nd lows. Then you go to 46.70. That's the October 10th lows. Now, people frequently ask me about these support and resistance levels, about buying at those levels, selling at those levels. And what's more important is what happens when we get to those levels and what's the volatility when we get to those prices. You want to think of resistance and support. And really, I think it's easy to put it into terms of resistance. So when we were coming up to 40 on silver, 50 on silver, $32 on silver, these are all different levels of resistance that we were talking about here. And the resistance is never one just whole round number. It's just what's the price action once we get around some of these psychological levels. And what you want to think about when it comes to resistance is think of it as a boiling pot on a stove here. So at the right temperature, that lid is going to hold that resistance point. But when it's too hot, what happens? The sauce hits the ceiling, and it's the level of volume and volatility when we get to those prices that indicate whether or not they're going to hold. And when you get to price targets like the 32, 34, 40, 50, you know, those price targets, they tend to overshoot, and support and resistance levels, well, on a long enough timeline, they're eventually broken. I mean, when I traded soybeans, it was like $6 to $8. Gold was like $350. I remember buying the $380, $400 call spreads going, holy cow, this thing's going to break through $400. Silver, I was trading at. People were taking delivery left and right. $4 an ounce, $5 an ounce, things like that. So remember, these support and resistance levels, they're eventually broken. Markets tend to change because the market is always evolving. So you look at a checklist kind of on the markets here, and this is one of the things I always do. It always starts off with the dollar index because the dollar is that basket index of 6 different currencies. So you can tell what's going on in the euro, the yen, the pound, the Canadian dollar, the Swedish krona, and the Swiss franc, all just by knowing where the dollar index is. The dollar index is down 16 at 98.58. Then I'll sit there and I'll look at, okay, what's the biggest mover out there? It's the Australian dollar, up just about 0.75% here. Why is it going up? Well, who's their largest trading partner? It is China. And then also something interesting on the live cattle market, how they were saying that they were going to increase those imports from Australia from like 20,000, I don't know, pounds or this or that to 80,000. I actually bought a couple steaks over the weekend and I saw they were packaged, shipped in from Australia. So that's interesting. Maybe I'll give a food review after this video. So looking at the 10-year treasury yields, that's the next thing I always look at here. Well, they're rising. They're right around that anchored at that 4%. Generally what happens is they overshoot in a direction or another, leading into a large event like an FOMC, a CPI, an unemployment rate. And then what they do is they revert back to a mean, and it's right around that 4% here coming into that. So you look at the VIX futures, that's the next thing I'll look at. We shot over 20. We couldn't hold over 20. Now we're back below 20. We're sitting at 1795, 1798, somewhere in that range. It's down about 3% here. And what the VIX does is it'll reaffirm that as volatility comes out, investors coming into the market, because why? They're not scared of the market. People are scared of volatility. It triggers their emotions. And when you get volatility, when the market just pokes its head into that volatility regime, you see markets fly around a bit. And then what I see is I see a lot of the traders, they don't switch from trading the like large contracts to the smaller contracts, and they end up getting chopped up and they lose a lot more money because those average true ranges, well, they explode. Now you look at the gold volatility, that's interesting because it's pulling back here significantly. It's at 24.75. It's collapsing below the 30 level. 30 is where people's hair really goes on fire in the gold market here. We had 32.95. That was last Thursday when we had that massive sell-off. $150. And as the volatility comes out of this market, speculators, they're going to move on. So you'll see some of this liquidation coming as volatility decreases. And it's because of the fact that they're going and they're going to start chasing the Mag 7. They'll chase Bitcoin. They'll chase whatever's moving and shaking in the market because people, hey, they like the action. I don't like to bet on the Bears every single weekend because sometimes, frankly, it's just boring. You want to bet on other things out there. So not a recommendation as far as sports gambling is concerned. Now you look at the silver market here. Well, silver's down 93 cents. That's about a 2% move here. And you get the cost of borrowing silver in London. It's retreated from its record high. So it's a sign that there's some greater liquidity that's returned to the market. Remember, it was almost a perfect storm because you had India that shifted where they went from buying gold to buying silver. Who fueled their needs was China, shipped over to India. China shuts down for a week. India goes and they look to buy their silver on London. London, most of their silver is tied up by exchange traded funds that are physically backed. So those silver that's available is already claimed for. So whatever is left here is borrowed out against futures or whatever they're trading over there. And you see the lease rates explode. Now you get those lease rates going from 34.9% back down to 5.6%. I post a lot of this data online, on Twitter, on things like that, send out to our clients where things are going here and what to watch. Now the sector and one of the markets that's really in focus for me is the copper market, because I think copper is the best long-term structural demand with decreased volatility in that market, making it much more investable. Now, that's not a recommendation. You don't just go out and buy copper. Use the tactical ranges. You look at support and resistance level. You identify the level of volatility there, what's going on, what are the support levels on it, and things like that. So you get the US and you get the China on the cusp of this sweeping deal that dials down some of the trade tensions. It eases some of the major risks to global economic growth. Copper is one of the best indicators of global economic growth. What's one of the best indicators of inflation? The energy markets, crude oil, natural gas, heating oil, things like that, what you put in your pump. So when people talk about gold, they tie it into inflation. It's really, you want to own whatever's causing the inflation. You get agricultural prices, they were coming down. You get meat prices, they were coming down over the past couple months. So basically, when you get the flows of how these things are going and when they're hitting their cycle lows, you could project out in a simple layman's term as to what these CPI prints are going to be. Now you look at the S&P 500 futures, up about 0.8%. You get the NASDAQ exploding about 1.3%, the Dow up 0.5%, the Russell up 1%. Many of you working closely with me have been looking at allocating and have allocated to the Russell 2000, along with your gold, your silver, your copper, playing some of the bear sides of the crude oil market, looking at some of the cryptocurrencies from both the long and the short side, and you have a portfolio of different assets, and those assets, you get a couple horses in the race that win, and you look at your account value tends to move from the lower left to the upper right rather than taking large one-sided bets on particular markets. So stocks, they are looking to extend to these record highs here on US and China, and they're close to this trade deal. The AI story has been a key driver of the rally here with the big face of a test this week. You've got the 5 Mag 7 names. They are set to report. Those results here, they're going to set the market direction here probably for the remainder of the year. Remember all those people talking about seasonal weakness in September ended up being the best one? Well, guess what? We're going to come into the best seasonal time here, November, December, into January here. The times to be long the U.S. equity markets based on past performance, but not indicative of future results. You know, you look at this U.S. equity market, one thing I'm going to talk about, people hate it, but you got this technological innovation. You got this AI boom as a major driver of the current rally. I'll be talking to the agricultural markets, and those guys know it firsthand. They've got drones that are analyzing fields. They've got them scouring the fields to indicate what areas need more rain and things like that to improve their crop yields. They've got tractors that are just driving themselves all over, mapping out the field, doing the harvest for them while they're on Netflix here, streaming out videos and things like that. So they're using AI from every different direction here, you know, really analyzing this thing and tweaking some crop yields and things like that. You got favorable monetary policy. We can look at what's the CME's Fed watch tool expecting. We've got a 96.7% chance of a 25 basis point interest rate cut. We've got the CME's Fed watch tool showing that on the December meeting, you do have a 95% chance of a 25 basis point interest rate cut. So that's back-to-back interest rate cuts. You've got a broadening strength in this market here. So that AI trickle effect going from those large mega caps down to some of the smaller companies out there. I was at a Luke Combs concert over the weekend. I was wearing my Meta AI glasses and I was recording video perfectly in 4K from a point of view from myself and creating great videos and content out of it. And then you've got an abundant sideline of capital. So all the people that have blown out during COVID, blew out during those April tariff lows, they're sitting on the sidelines here waiting to deploy some of that capital that's going out there. So that's where I think that a lot of these drivers can continue to maintain upward momentum on these U.S. equities. And the thing about bull markets or bear markets is that you want to try and ride these things as much as possible. Take some of your feelings away. And what I'll usually do is once we get deep into a bull market, I'll start looking at, like, from an accounting standpoint, make one of those T-squares. What are the positives? What are the negatives? And I really try and keep an unbiased, balanced approach here. Is it frothy? That's not actionable. Is it a bubble? That's not actionable. Seasonality? That's not really actionable. A lot of these things are interesting to talk about, but they're not really actionable. I'll look at CapEx spending, things like that. Just real specific things. What's going on? In agricultural, what are these exports doing? Are they accelerating, decelerating? How is the rate of change that's happening on the size of the production, the yields, things like that? And I take the charts and I let the charts tell me when we're having a double top, a lower high on the chart, when I should be trimming positions or adding positions on. Now you look at things like Europe and Asia. The European stocks, they were muted as traders look ahead of this U.S.-China trade negotiations and the interest rate decision. So they really look at the U.S. markets. And you get over to Asia, they tend to operate on their own drum here. So the benchmark had climbed to a fresh record high. Of course, on the U.S.-China trade talks, they paved the way for this finalized trade deal. You got the MSCI Asia Pacific Index gaining about 1.6%. You got the South Korea's Kospi jumped to 2.6% to a new all-time high. You'll get the earnings out of the 145 companies that have reported so far. 84% have beat forecast, 14 have missed. We should have durable goods out, but they're not coming out. So it is what it is. We got the government shutdown as well as the manufacturing survey. And then you look at the ETF flows. So this is what I'll start really watching on the metals markets, because remember, they really came in there pretty hard. Now we're getting some of the the bullish drivers like the leasing rates on the silver market, we're back below that 50 level, that psychological level here. Some of the ETF flows are starting to come out of the market here. Weak hand stops might be getting hit, things like that. So gold, you do have that ETF change here at 18% here. Gold's up 57%. Doesn't mean that it needs to go to 114% double from here. But it does have, again, that structural support, so we'll keep an eye on that. On the gold market, you got the biggest one-day decrease since May 16th, third straight day of declines, and longest losing streak since August 21st as far as ETF flows. You go into the silver market, they cut about 4.94 million troy ounces of holdings in the last trading session. And then what I'll look at is the weekly change. So we look at it on a daily change, we look at it on a weekly change. That's where we get a multi-duration factor model here as far as what the ETF flows. And you got ETFs, they reduce their gold holdings by about 45,000 troy ounces. They increase the silver holdings by 1.1 million ounces. So we'll see what they do right here. I believe that ultimately the silver market will find some floors at $44, $45, $42, and then they'll start bidding it back up again and make another potential run up to the 50. So you look at the platinum market, they did reduce their holdings there just a bit. Same thing with palladium. Gold-silver ratio, again, interesting but not actionable, is at 85-1. So we'll keep an eye on all that data. Sorry for the longer video here, but be sure to check out. We'll be posting that video here of AgriTalk, and I'll be talking about like grains and give you more of a broad overview on the market. So if what I'm talking about seems a little bit complex, we kind of break it down into a simpler form for different crowds. Not saying that they're just maybe a little bit more unfamiliar with some of the working dynamics of the precious metals market. So I just want to present to them in a nice, easy way for them to understand. So you got any questions, futures option trading, shoot an email, info@bluelinefutures.com. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.